Hello, today is Wednesday and it is the 6th of June 2012. I want to talk about bull markets and some of the things that are common or characteristics within bull markets. As far as bear markets is concerned, the exact polar opposite. When a market is bullish, and these are very basic, but I think they're also important as well. Some of the key characteristics is seeing markets correct through time, and gold is shown an exact copy of something like this. I'm not showing gold today, but later this week and definitely into the weekend I will. That results in the continuation of gains, so sideways, up, and then up again. Very, very common. Now, it's also more common, I think, that the up move takes less time than the sideways consolidation, but in tight ranges, that's a very common characteristic to see in bull markets. Also, the odds 61.8% and really 38.2% to be tested quite frequently. So you have a nice up move, and then maybe you have a 38.2% correction, and then another 38.2%, and maybe you have your big 61.8 before things start to regain. So these are also a couple characteristics. And the final one I'm going to go over today is several upticks in a row. 6, 7, 8, 9, even 10 as a large form of what happens in bull markets. The gold yearly chart is a perfect example of such. So let's get started within the analysis. This is the quarterly chart for silver, obviously in a bull market. The breakouts occurred roughly in here, and since then it has remained bullish the entire way through. There was a little bit of a fake out in 2008, and currently it's in an uptrend still, testing this 18-period average. And obviously there's that triangle that I talk about in this descending triangle after it's already lift off, showing that as long as it holds above this, or when it breaks the downtrend, that we'll take a look on the weekly time frame, things ready to get going. But really just breaking above this previous high, breaking above 38 for it to really get going. If you look at point A to point B, there's quite a few straight up green candles in a row. So this is the quarterly chart. Let's now move this on to the weekly term time frame. And it's been a while since it's had an up week. In fact, if we start here, and I'm looking at most likely, and I don't want to count it, but I'm just 16 or so, 17 weeks of only having one real up green candle, because this was a real green candle in here. Yeah, this one here was up like 2 cents, and this one was up about 10 cents. But right now we have a green candle that's up for the week right now at $1.25, and currently up 4.3%. There's still the rest of today. There's Thursday and Friday before the completion of the week, and it's also now coming down to this declining 18-period average. It's tough to say that this is still in a bearish trend, and the reason for that is because this low has not been taken out. Also, this high was taken out before, but you can almost nullify this for now because of the close test and the failure for it to find and hold support at the 30 level. Now this 30 could still become that of the possible breakdown, but overall a little bit of a choppy situation below the average, above, below, and not breaking below this level. That sideways consolidation until it breaks above 37, or really breaking below 25, it's going to remain in the neutral state. If we move this on now to the daily chart. Yesterday I was stating that the 18 averages were starting to rise after it was consolidating within this band for quite some time. Well, today's chart has broken past this resistance level, looking to now make a test of this 30 level, and that's going to be interesting to see how 30 plays out. The odds does favor that's where a pullback would take place, and that would be a situation where it is both bullish and bearish for the market to go lower. And those are usually the type of setups as far as chart analysis that I would look for. a situation where it's both bullish and bearish for some event to happen, and then you play on it. And a situation here is a wager for the price to go lower. Maybe you say, okay, once it gets above here, I'm through, I lose. And then the price action you'd be looking for, well, we can look at that better on the 5-hour chart when we take a look at that. So therefore, as far as this changeover, what I was saying yesterday, step 1 is getting this thing to flatten out. Step 2 is breaking out above it, and then after it's done doing what it has to do, and it either corrects down through price, or it goes sideways for enough turns for this 18 average to catch up to it, and then you try to, from that point there, you establish resistance. Let's say it tops now, so this is resistance 29.85, and then as you're breaking it after the consolidation period, that's the time frame that you're looking to get in on the price action as it's breaking out, as it's already had its consolidation period. That's not always the way it's going to work. If it just really explodes, then you have to give it the benefit of the doubt that the changeover is coming into play, and then you adjust your message of the market to wild movements, and wait for the volatility to calm down, basically. And now let's take a look at this on the 5-hour chart. So as far as this one, I got this from the breakout lows. So therefore, if the price action does go up to 30, then these lines would barely go up, but for the most part, I would be expecting as the best chance that the price goes up to 30, and then over the rest of the week into early next week, a retracement back down to this previous resistance at roughly at about 28.95, even 29 flat. So if you make a wager that silver is going to go down if it goes to 30, and it's going to go down to 29, you're basically looking to gain $1. And if you put a stop at 30.50, then you got to be right about 40-45% of the time to make it a decent play. Now overall, this has been in a choppy situation since really in here, because you're in a downtrend below the 18 average, then you break above it, then you break below it, then above it, then below it, then above it, and now you've broken above it again. So this looks like it's the end of the neutral market, and the big resistance field is set up in around a little under 29. So that's an area that you would look to find future support. This upper band is set at exactly 29.96. So it's pretty much hit that level. And according to this chart, although the line's up here, it has touched this level. And from this point on, it's, again, not a surprise for it to maybe go sideways or to head lower. But if you see continued further upside, and let's move this back to the daily chart. If you see further continued upside, it goes to 30, and it even continues further, then basically there's some sort of forces going on that are stating, well, it doesn't look as if 30 is going to be resistance, and there could be a fast move to the next level, which in this case is 32 2/3, or this area, instead of being resistance, is going to be used as support. So a situation like that, as it breaks above it, maybe goes to 30.75, and then all of a sudden it's doing a pattern like this before it's ready to move on to its next level. Thank you for tuning in to today's video, and have yourself a great day. Bye-bye.